Greetings, members one and all of the Salivation Nation. Gold and silver are under pressure. Let's explore. Yes, the tail of the tape is the red numbers with the down arrows with gold and silver. Let's take a look here. We can see they're down pretty, not substantially, but the fact that this has been a trend for the past about a week now, it tells us something. Now, this time, usually this season, we do see a doldrum in the precious metal prices, and this year is no exception, but we're starting to see numbers that are getting closer to pre-pandemic era. But I still think we have a ways to go for sure between the numbers. But nonetheless, gold took a bigger hit than silver did today, surprisingly. But it's no surprise, according to Bubba Horowitz here. The Thanksgiving holiday is over, and the markets are in the home stretch of 2020. From a trader's view, there are 3 weeks left in the active trading year, although there are almost 6 weeks until the calendar turns over to 2021 from this commentary piece on Kitco. One thing that remains constant, markets trade in the path of least resistance. In gold and silver, that trend is down. The move began at the beginning of August, and like a nightmare, it kept getting worse. As we switch to February futures in gold, the next major support level is 1750. Silver futures are now in March and have two significant levels, the first being $22. If that is violated, silver could see $20. And by the way, I'm on record as saying, and by the way, I don't take my predictions too seriously, and you shouldn't either, and that is, I don't think we'll see silver go below $20, but at the rate it's moving, it's becoming less likely that that's going to be the case, and I don't think that gold will get below $1,600 for its lows. Besides their algorithm being short, gold and silver are likely to have a crucial reversal on a monthly chart indicating much more bearish conditions ahead. Interesting. A key reversal as a trading pattern that may signal the reversal of a trend that is based on the high and low of any time frame you are watching. Gold and silver both traded higher early in the month and look like they will close on the low. Their critical reverse pattern is healthy and indicates this downtrend is here to stay for a while. But does that mean the end of the year, or how far out? I mean, we're talking about February futures and March futures. Well, there we go. We'll see how that plays out, and we could see it into the beginning of the next year, even past the inauguration of whichever man holds the office of president. The critical reversal pattern is healthy, and we remain short gold and silver while long platinum. There is never reason to fight the trend. Those who do typically end up compounding losses and out of markets when the pattern returns. And so there we can see where it is a gold spot for one day in that chart there. But let's take a look at the numbers here. What do they tell us? And the tail of the tape is everything is down, save for rhodium, which is holding on at 15,700 in the ask price. Huge difference between the bid price. But gold is down 0.68%. Silver's down 0.53%. It's unusual for the silver not to fall faster. I think there's several reasons for that. Potentially is that we may see this more resistance in silver because of the potential demand that could come with 5G, solar panels, and the like, and which means that no matter what happens, whether you have a recovering economy with increased infrastructure in that regard, in terms of solar panels and 5G, or a not so good economic situation to come, then we very well may see silver act as that hedge. It could rise because it's a hedge, or it could rise because it's a commodity. Either way, we're now looking at a silver to gold ratio still very high at 78.6. And I believe that all will tell us what is going to happen with silver in terms of its dual nature. And I think there's good reason to be bullish for silver because of its dual nature. Not so much for gold, in my view. Although, everything should lead that silver, this metal, would rise on account of good economic progress of recovery and increased demand for the metal and uses for things like cell phones, computers, all sorts of biomedical field stuff that more likely will sprout as and increase because of the coronavirus and the pandemic that we see before us. But it seems like there's going to be increased demand for silver if that does occur, or increase in demand for the metal as it's seen as a hedge against economic stability if the economy takes a turn for the worse from where we are at now. Either way, it seems like silver should be bullish under either condition. But we are in a holding pattern, I believe, right now. And I believe that's kind of what Bubba Horowitz is kind of talking about here as we await and see what's going to happen on multiple different fronts before any money is spent or what have you. But once a relief package is set into motion, then I believe we will see both metals go up because of fear of the dollar's threat under new spending. So we shall see. It's going to be fascinating to see how this plays out. But I believe that silver has more potential at this point, given both those circumstances. Gold will always be the ultimate hedge against economic instability and less volatile than silver during these times. And even though really there's more potential for silver in that regard, there is plenty of silver out there. And I believe really, even taking into account some of the reports from the Silver Institute, we'll have to see what numbers they come up with. There are other things that aren't accounted for in terms of demand, I believe, or supply. And so we've seen deficits from the Silver Institute, but it's been reported differently nowadays than it was in years past. I've covered that in a prior video. And so that is something to kind of keep in mind. But the gold being that ultimate hedge, it may not do as well. We may see the gold to silver ratio narrow in the coming months, but gold could hold its own more. But we'll see how that plays out for sure. Nonetheless, either way, it is intriguing and fascinating. This is a buying opportunity with the metal prices where they're at right now. Because I don't believe that this is going to last if it does last through the beginning of the year, and like worst case scenario, February, March, beginning of March, well, this could be a buying opportunity. It's a buying opportunity I'm not able to take advantage of at the moment. But nonetheless, does provide a way for people to get into precious metals at lower prices. And again, keep in mind that just because I feel that silver has some potential to move up, based off the two scenarios I laid out, does not mean that it won't still be volatile during those times. Commodities are by nature volatile. Silver acting as a commodity can certainly do that. As it does continue to climb and the ratio narrow, it's going to be something to see. People may be skittish about getting into silver because people have been burnt on silver in the past because of bullish predictions and thinking it's going to hold its own. It's going to outperform gold, and usually it does in short little bursts. But again, typically on the way back down, it underperforms gold. In this case, it's not underperforming gold, but not by a whole lot though either. Yes, it's all things to keep in perspective as we watch these prices, which is something I've always advised folks, even though I'm not a financial advisor, but, be careful. Always look out and understand that anytime you purchase a particular asset, a commodity, stock, whatever it is, understand that there's always potential that you could lose money right away when you make the purchase. Some of these things you have to hold for quite a long time in order to see results. And even as such, it's a long time taking into account other purchases you make of the metal at any given point in time. And that's the idea of smart dollar cost averaging, which is a theory that I'm going to probably talk about more in detail in an upcoming video in due course. But there you have it. That's the news of the day. Gold, silver, they're kind of under pressure and they're down right now. We'll see how it plays out in the end. In the meantime, we'll just keep moving, take advantage of any dips for any purchases that we make, as long as we're fiscally responsible, and we will stay tuned and take heart and take heed in understanding and knowing that gold and silver are the ultimate insurance policy against economic instability. I'd like to extend a multitude of gratitude to you all for taking the time to watch this video and encourage you to please rate, share, click on that notification bell so that you can be made aware when new videos are posting, comment, and subscribe.